Not too long ago, I went on a quest to try to find the highest dividend yielding publicly listed stock, ETF, fund, or whatever out there that I could find just to see what it was out of complete curiosity. After scouring the internet for about 2 hours on various financial websites, I think I found what has to be the highest paying fund out there. With a dividend yield of over 30%, it sounds too good to be true. But after reading and studying more about this fund, the more I started to understand its high dividend yield, and eventually I decided to buy a small number of shares in it. I'm talking about the Credit Suisse Crude Oil Shares Covered Call Exchange Traded Note, ticker symbol USOI, with monthly dividend distributions at a dividend rate of 38.38% according to Yahoo Finance. It sounds too good to be true, right? I mean, surely a dividend cut is imminent. How on earth could a fund offer that much in dividends and be anything close to safe? And on top of that, it pays monthly dividends, not quarterly, which sounds even better. I definitely thought that was too good to be true, so I decided to calculate the dividend yield for myself. And what I did was I added up the last 12 months' dividends, which came out to about $1.51, a little more than that. And then I divided that by the current share price, which is $5.06, which is how you calculate a stock's annual dividend yield. It turns out Yahoo Finance yield is a little bit off. According to my math, the dividend yield is actually at about 30%, but still that's nowhere close to being the typical dividend yield for your average stock or ETF. I decided to take a closer look at this fund, and I found some really interesting stuff. For starters, this fund actually has a higher trading volume than I was expecting. As you can see, nothing too interesting happened to this fund's share price today, but it has an average trading volume of 525,243 shares. To put that into perspective, that's actually a lot higher than some of the other funds I've covered on this channel, like, say, the Global X Funds MLP ETF, which only has an average volume of about 134,000 shares. The significance of a higher trading volume for a listed security is that the higher the trading volume, the more liquid the investment is, or in other words, you'll be able to easily unload your shares if you need to. If USOI was some unknown, bizarre holding that people didn't want anything to do with, it wouldn't have such a high trading volume. Another thing I thought was really interesting was how many people are really passionate about this fund. On Yahoo Finance, if you click on the Conversations tab, you can actually see that there's like a message board for every single publicly listed security on this website, and USOI has a pretty active community of people. Granted, this doesn't necessarily mean anything. I mean, after all, a sinking ship is a sinking ship, but this isn't some crapshoot fund that people are constantly warning you to avoid. So we can see this fund isn't necessarily a total joke, but before going any further though, it's important we figure out just what exactly this fund is. After all, it's not an exchange-traded fund, it's an exchange-traded note, which is a completely different type of investment from an ETF. An exchange-traded note seeks to track the return of a specific stock, commodity, or currency index. They're unsecured debt obligations of the bank or other financial institution that issued them, and they don't represent ownership of any individual securities. An ETN's performance depends on a combination of things like the index the ETN tracks, the underlying securities in that index, and the credit risk of the issuing firm. Higher fees are typically charged, which can reduce the overall performance of ETNs too. And in the case of USOI, it follows a covered call strategy off the United States Oil Fund, which is ticker symbol USO. If you've seen some of my other videos, you probably aren't a stranger to what covered call funds are. But covered calls are ultimately used to increase income, or dividends in this case. USOI pays a variable monthly dividend based on the notional option premiums, if any, that are generated by the index's hypothetical monthly sale of call options on the shares of the United States Oil Fund. What that means is, the more variable the price of USO, the higher the dividends we'll receive as investors of USOI. If you look back at USOI's past dividend distributions, you can see it doesn't pay the same dividend amount every month. Their last dividend declaration was for roughly 11 cents per share, and if you look back in April of 2020, it paid a monthly dividend of over $1 per share. I'll explain why the dividend amounts change so much from month to month in a little bit when I dive into the risks of this fund. I was also curious about the tax implications of owning USOI, because if you own USO, which is what this fund buys options on, you'll also receive what's known as a K-1 tax form if you're in the United States. These tax forms are notoriously difficult, and they usually require the assistance of an experienced accountant. You'll get one of these K-1 tax forms anytime you invest in a master limited partnership, and I typically avoid investing in anything that's going to issue me one of these. As you can see, according to ETF.com, which is a great resource to figure out how funds are treated in regards to taxes, it says that USOI does not issue a K1, which is great. You can see for USO, it does say you'll receive a K1 if you invest in that. I also found this article on Charles Schwab's website about exchange-traded notes, and it says, ETNs may have some attractive tax consequences. While this could change in the future, ETN investors are usually responsible for paying taxes on their investment only when they sell it for a gain. ETNs don't distribute dividend or interest income the way that a stock or a bond fund may, so all taxes are deferred and taxed as capital gains. So reading this doesn't make me too nervous about the tax implications of USOI. Now we need to address the risks involved of investing in USOI, which there are some pretty significant things that I need to mention. The first being is this fund's share price. If you extend the history of this fund, you can see that it's taken a massive nosedive since being launched. Once trading at over $30 a share, it's now hovering at around $5 a share. Back in March of 2020, this fund plummeted from the pandemic, and since its dive, it's been extremely slow to recover. It's up about 7.5% from this time a year ago. Because USOI mirrors USO, the two perform similarly if you compare them side by side. But as the case for many covered call funds, when it comes to recovery, they almost always underperform. USO, for example, is up 73% from this time a year ago, compared to USOI's 7.5% I just mentioned. Another risk with exchange-traded notes is that the issuing company can basically close the fund whenever they feel like it. It's possible that ETNs can be taken off the stock exchange they're trading on and instead be placed in the over-the-counter markets. OTC funds are traded a lot less, and therefore they're less liquid investments. I'd assume that if USOI did get transferred to the OTC market, a lot of people would be trying to dump their shares. With that being said, after taking everything into consideration, I decided to pick up some shares of USOI. Right now I consider myself to be testing the waters with this fund, and with such an attractive dividend yield, and they haven't skipped a month since this fund was launched in 2017, I just found it too good to pass up without giving it a shot. I figure I'd also mention that Charles Schwab, Fidelity, as well as Vanguard heavily discourage people from investing in any type of exchange-traded note. According to Vanguard, they said that ETNs should be only bought and sold by sophisticated investors. As of right now, I don't have any plans to make this fund more than about 5% of my total portfolio. It is nice to think about though. Imagine you invested $10,000 into USOI at $5 a share. Last month alone, you would have made $220 in dividends in just 1 month. Next month it could be 3 cents or it could be 31 cents. You can't depend on the dividend amount being the same every single month like you can for, say, closed-end funds, for example. You might also want to keep in mind that the company behind USOI does have some other very high-yielding ETNs as well. Ticker symbol SLVO is another really popular one. While it doesn't have quite the exact same dividend yield, what made me pick USOI over SLVO is that SLVO has done almost nothing but gone downhill in regards to its share price. SLVO tracks the Nasdaq Silver Flows Index. Then there's also GLDI, which is just like SLVO and USOI, only it tracks the Nasdaq Gold Flows Index. So in conclusion, I'm pretty excited to see what happens with USOI. I definitely don't think it'll ever experience a good amount of growth in terms of its share price, but the dividend yield has me pretty excited. Only time will tell if I'll regret this decision. We'll just have to wait and see what happens, but I'd be curious to know what your opinion and thoughts are on USOI, or SLVO, or GLDI. Feel free to leave a comment below on your opinion. Alright, that's going to wrap up today's video. Thank you all so much for watching, I really do appreciate it. If this video benefited you in any sort of way, please click the like button below, and also feel free to subscribe to the channel if you want to see more aggressive dividend investing strategy videos. It would just let me know that there's a sizable enough audience out there who wants this kind of content. Okay, thanks again guys, and I'll catch you next time. Take care.